Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome back a special guest who we had a chat to a little bit over a year ago. That's Simon Dixon. He's an educator. He's a self-taught economist, Simon, a Bitcoin whale, many traits. So welcome back to the channel.
Yeah, thanks. I'm actually formally educated in economics as well. I actually did a master's, but I unlearned everything that I learned in economics when I got into the real world.
That's like a lot of people say, isn't it? They learn more when they're teaching their own methods and outside the scope of the mainstream, education. So I guess to start off with, I just wanted to get your thoughts for people that haven't followed your work about the way you think about the debt-based monetary system and what's wrong with it.
Sure, yes. I mean, we covered a lot of this in the previous video, but a brief overview is I wrote a book called Bank to the Future, Protect Your Future Before Governments Go Bust, which has become very relevant today. But that book was written around about the same time that Bitcoin was created, and then spoke at the first Bitcoin conference and been investing in the industry ever since. And in the book, I talked about three issues with money, which is that when you deposit your money at a bank, the bank becomes the owner of your money. Compared to Bitcoin, it gave you a way of owning your own money. Once the bank owns that money, they can spend it as they choose. With Bitcoin, there's a peer-to-peer electronic cash system. And then finally, the monetary policy, the way that the traditional money is designed is that it's all backed by debt. And therefore, in order to have an economy, you're forced into two different scenarios that the government has to choose between. One is find a new market for debt in order to stimulate the economy, or the other is try and reduce debt and have a depression. And there is only the two options, or a recession, depending on how severe they want to take it. With Bitcoin, the supply is fixed as 21 million. Everyone is familiar with the Bitcoin monetary policy, hopefully by now. But what we're seeing right now really is a movement towards an appreciation by central banks that we are reaching maximum credit card scenario for every type of organization. So most individuals, the average individual that hasn't discovered Bitcoin lives month to month. And the system drives people like that because when you back all money by debt, you create a scenario whereby the rich-poor divide continually increases until eventually those controlling the flows of debt end up with all the assets. So that's what we're seeing right now. Central banks have been given the ability to create money and purchase government debt. So what they're doing essentially is all individuals are maxed out on their credit cards. They're in lockdown. They can't afford their mortgages. They can't afford their rent. They can't afford their credit card bills. This causes systemic risk in the financial system. All businesses are either completely thriving or going bankrupt or trying to figure out how to adjust.
Yeah.
So they're all going for bailouts, but their bailouts are coming from government, and government is borrowing that money from the central bank through the bond markets. So what you're seeing now is essentially all of this debt that's been built up by individuals, by companies, and by governments is now being utilized in order to take every single asset in the world, every single company in the world, every single individual, and they're moving into control by central bank. Now, central banks are issuing their own central bank digital currencies in order to take control of the payment system and wage war on the retail banks as well. So we're seeing right now one of the most radical shifts and radical monetary reforms that essentially people think is, and the irony of this situation is that there is a genuine health crisis, which is leading to an economic crisis and will lead to a financial crisis. But the only way to fix the financial crisis is through radical reform. So the situation that we're in today is that we've reached a period in history whereby central banks have now realized that this is the end of the financial system as we know it. And therefore, the government need to chuck everything they've got, 6 trillion, 10 trillion, everything. They need to chuck absolutely everything into it. And then at the other side, we need to see some radical monetary reform which unfortunately is going to lead to this two-tiered world, which is a privacy, freedom-centric world called, that exists outside the system, like Bitcoin, and a monetary system that is going to have more of an impact on personal freedoms and privacy than we have ever seen in history, throughout history. And those two-tiered systems are being driven right now. And really the health crisis was the catalyst for exposing the systemic risk in the system that then leads to these radical policies where you essentially admit that the system as we know it no longer exists. And at the other end of this, we're going to have a new system. And that is the time we are alive in today.
Yeah, and today I don't really want to talk about the health crisis too much. It's sort of everyone's pretty familiar with what's going on, but it was the pin that pricked the bubble. There was so many other things happening, and it was a matter of time. Maybe this has accelerated it or whatnot, but the system was coming to an end as we know it. Other debt bubbles.
I created a video on my YouTube channel where like 7 events that could lead to exactly what we're seeing today. And I didn't include the 8th, which was a global pandemic. But it's just an event that exposes the weakness of the financial system. And this is it. It was not exactly how I thought it would plan out, but the effect and the symptoms are the same.
Yeah, and since 2008, we've really driven other, the auto loan bubble, student loan. Australia's got the housing bubble. There was really not that many areas left to go to continue to grow the debt. And as you say, as soon as it stops, even the rate of change, as soon as that stops, the system has sort of come undone. The thing that I find most interesting, and you've talked about this a lot, and you talk about the 6 different types of money, but for people at home, to simplify the conversation today, I maybe want to focus on the 3. So most people are familiar with coins and notes that they have in their wallet that, the treasury, the government can actually make those. Then we've got the central bank printing money that you hear about in the news and whatnot, but you've also got government that can spend that money, don't you? And this is where the battle's heating up between, I guess the next type is the economists that debate whether or not banks creating loans is creating money to some degree. But it's those 3 powerhouses that are all sort of heading to war with each other. And we thought that Bitcoin was going to be at war with the banks and governments and whatnot. But I actually see that those 3 are now in a power struggle where central banks, as you say, they want to create digital currencies and they want you and I to have an digital account directly with them. They can monitor what we're doing and whatnot, but that bypasses the banking system. And the government are also saying, well, hold on, if we're going to spend all this money and Trump's going to say, well, I'm just going to spend all this stimulus, that's going to be great and get me re-elected and whatnot. So we've got these 3 different types of people that all want the power, they all want to spend, and it's making people say, well, what is money and who's got the power? Do you see a lot of friction? Do you agree with everything I just sort of touched on?
I do, and that is what I've dedicated the last 20 years of my life to. So when I was started academically in economics, I jumped upon this question of how money is created and who profits from it. And if it's not exactly as we say it is, as we're taught in economics, then does that mean that the foundation of all economic models that we're using, whether it be Keynesian economics, classical economics, Austrian economics, are those called into question? And the answer that I've thought is, I dedicated my life to figuring out whether that was. And it turns out today that we're seeing in real time that it is. Now, the new power struggle is exactly as you said. You can imagine 4 quadrants. You've got a form of money that was created with no political connection to any country, Bitcoin. Then you have a form of money that's all backed by debt, which is a digital representation of the government's currency called bank deposits. And now you have, so in the last financial crisis, we chose for 2 options. In countries like Cyprus, they chose bail-ins, where they take the money of the depositors and use it to save the bank. But most countries around the world chose bailouts. And so the government decided to take on the debt and give it to the banks so that they could recapitalize themselves, have regulatory reforms, and move to a stress testing environment, as we have over the last 10 years. Then you have these central banks, though, because Bitcoin was created, it showed and introduced new interesting technology that the central banks have been learning from And that is that they can do what the government have done in the past. In the American Civil War, the US government did not have enough money to fund the American Civil War. And in fact, the Bank of England was created in 1694 in order to fund wars. And that is the history of, it was a private organization that lent money to the government. The Bank of England has now been nationalized over time, but the Federal Reserve is still private. And most have a quasi model in the middle. But during the American Civil War, the government's printed what's called the greenback. And the greenback is money that is not backed by debt. It's simply, and so you actually have, in America, you have different types of paper money. One of them is called a greenback, and it's quite rare now. But that was money whereby the government just simply printed it debt-free without going through the central bank system, without going through creating money digitally through a bank backed by debt. So that form of money is now really starting to be introduced. Now, this creates a power struggle between two organizations, the central bank and the government. Now, the government can and has every authority to create its own money, but instead it's choosing to fire up bonds and borrow the money from the central bank. Now, that creates a real inefficiency because it increases the amount of money that the government have to repay, and the interest payments on trillions is certainly not trivial. In fact, it can reach the stage where the interest payments on these bonds could be greater than the amount of tax that is actually collected if this system continues in this Ponzi scheme.
Yeah, and I guess if I can jump in quickly, Simon, I want people to understand that point that you said. So if America has a $20 trillion deficit and interest rates go back to 5%, $20 trillion debt, interest rates go to 5%, all of a sudden they might not even be able to pay the interest on all that debt. And at the moment, they're issuing all these bonds, and the central bank's saying, well, we'll buy them off you and give you that money. But now they're saying, well, why do we even have to do that process? Let's skip that process. And central banks are saying, no, you need us. They don't want to be felt like they're not needed, do they? And that's where this power struggle is coming in. And does that tie into directly modern monetary theory?
Well, that's the question. I have not seen one government ask that question yet. They just rely upon the central bank and just take it as given. So the central bank says we're needed, but it creates a massive, massive inefficiency in the middle. So this power struggle is, so now central banks are saying, look, why don't we just create a new digital currency? And then what we can do is we can have like a fail-safe, the central bank, one of their manifestos is to be the lender of last resort. But now they're saying, let's not be the lender of last resort. Let's just be the guarantee system for banks going bust. So rather than lending the money to the bank, why don't we just let the bank go bust and then we create a digital wallet? We do helicopter money so that everybody has to download this digital wallet. When they download this digital wallet, they've got an incentive to download it because they get some free money. Then you have a perfect mechanism for distributing digital money. And therefore, when the bank goes bust, you can simply say, rather than bail them out, let's not let the government do that. We'll just let them go bust. We'll take all their assets. We'll soak up all the assets, or we'll auction them off on the market to the highest bidder, to your pension or whoever. And what we can do is we can just, if you had $10,000 at that bank, you've now downloaded this app and you've now got 10,000, and you've replaced all that debt-based money with debt-free money. But what the governments don't realize is if they chose, they could do that without the central bank as well. Yeah. So what we're seeing is this movement from all these complex forms of money, M0, M1, M2, M3, M4, that could just move to M, and then the mechanism for controlling that money can be ultra transparent, and it can actually be used as a profit mechanism for governments to reduce the amount of tax that people need to pay. And we're seeing what I tried to highlight all those years ago in the book Bank to the Future, that actually you can take out all of this complexity and inefficiency that leads to rent seeking, that leads to fees, that leads to the central bank owning all the assets. And you can actually just make money simple again. And do things the way that people think, and it could lead to a reduction in tax. But the governments aren't asking those questions. The central bank knows this, and they're making sure that they're at the center of everything. And now they're taking, in order to maintain their control, they're going to let the banks go bust, and we're all going to be in this central bank digital currency, where they'll make cash illegal, so governments don't benefit from that. And essentially, we're moving to these bigger and bigger central banks controlling both the payments infrastructure as well as controlling all the assets in the world, as well as controlling monetary policy.
Do you think the banks' unwillingness to lend and the repo operations that central banks had to do are sort of those first signs of saying, well, hold on, we're going to try and shore ourselves up, increase our reserves, and we're not willing to lend. The central bank, you guys have to lend. We don't want to take those risks anymore. And on the top of that, I thought it was really interesting was that Neil Kashkari's, that his name comes out and says, we're going to print as much dollars as we have to. So there's not these worries of bail-ins anymore. Everyone can come in, get their money out of the bank if they want. And there's not these fractional reserves, nothing to worry about. We're going to print as much as you want. I'd love to get your thoughts on that.
Yeah, so now so if you're a retail bank and you see, holy shit, the central bank digital currency is going to be created, this removes a lot of our power. Or you see, well, maybe governments will start to figure out that they don't need the central bank. You start to think about, well, what am I going to do? What's my reactionary model? If I'm on the board of a bank and I see what's unfolding here, I'm going to recapitalize because I don't want to be in a situation where my bank is subject to the risk. So over the last 10 years, banks have been doing two things. One, they have been taking all of their debt portfolios, repackaging them through an investment bank and selling them to your pension so that they don't have the exposure, you have the exposure. So all of these products, and that was the 2008 crisis, they took all the mortgages, they packaged them up into a mortgage-backed security. They then gave it to the investment bank, and the investment bank sold it to your pension. So then you ended up with the exposure, and then the bank took the bailout money. They didn't have necessarily all the risk anymore. They took the bailout money, and they used that to continue business as usual, pay their bonuses, recapitalize the bank. Now, over that time, we had regulatory reforms and stress tests. So what does the central bank do? Well, they put us into a low interest rate environment. They put us basically at 0%. Now, at the same time, the cost of mortgages and the cost of borrowing and for a business loan fits into two forms. If it is guaranteed by the government, then you can get a decent rate on that. But if it comes from bank exposure, you get a higher rate because what they're doing is they're taking the 0% interest, they're increasing the rate at which they issue these loans, so these loan rates, and that gives them more and more cash in order to recapitalize so that they don't end up in a scenario where the central bank essentially wipes them out and lets the bank go bust.
Yeah, and for people at home, most people have seen the documentaries or the Wolf of Wall Street where they talk about those collateralized debt obligations where they package all those mortgages together and put them in a bundle and they sell them to someone else. Now, what we've seen recently, particularly in the oil patch, and we did some explanatory videos on this, Simon, for people at home about the oil market, the junk bonds and whatnot, how they've packaged up all those loan obligations to shale companies. But that's happening all through the corporate space, isn't it? That they've now packaged up these pretty boxes, these CLOs, and it's 2008 all over again.
Yeah, I mean, absolutely. I mean, nothing. So look, what happened with the regulatory reform? There was no banking reform where they said, let's change the nature of money. They just said, let's make the bank stronger. So how do we make the bank stronger? Well, we need them to go through stress tests so that they've got higher capitalization reserves in times of systemic risk events like today. So how do they do that? Well, they still have the ability, the economy still depends upon new debt being created in order to have an economy. So the debt still needs to increase. So they put quantitative easing, gave it to large companies. The large companies bought back their stock and created a 10-year stock market bubble. They took the banks, essentially repackaged their mortgages, sold them to the pension, and because we went back to business as usual, they started issuing more and more mortgages, more and more loans, but selling them on as they did during the financial crisis. So we end up in an artificial real estate bubble as well. So when real estate bubble is moving, stock market bubble is moving, and essentially all of it was funded by trillions and trillions of dollars of quantitative easing, then essentially you're just moving to the central bank owning everything. And that's where we're moving to right now. We didn't reform money. We just simply repackaged the same system and took the risk and put it on someone else. We didn't remove the risk. We just simply repackaged the risk and put it somewhere else, kick the can down the road a little bit further, and then all you need is one event, and this was a monstrous event. Don't get me wrong. I'm not criticizing governments for their actions and what they're taking here, because this was, we don't want to go deep into that, but this was a monstrous event. And it required vast sums of money. And so really, this is just the catalyst. At the other side of this, as I said, we end up with a really horrible form of fiat money and a really beautiful form of Bitcoin, and a more educated public, and more and more, and these competing systems where Facebook will have their currency, Bitfinex will have their currency, the Bank of Japan will have their currency, and they'll all start competing in currency wars. And I think the interesting thing that comes next, and I created in 2019 a video that got a lot of pushback on my YouTube channel called "How Bitcoin Could Become a World Reserve Currency by 2020," and people thought it was crazy. But I was talking about an event just like this. So one of my early videos, I created a video in 2010 called "The Great Depression of the 2020s." In the 2020 Great Depression, I talked about this systemic risk event due to economics and repackaging over the next 10 years that will lead to something like this. And then I think smaller central banks are going to start saying, well, how do we get a piece of the pie? How do we compete in an environment where essentially these currency wars and global large central banks are redefining what currency is? And essentially, all these central banks are going to know everything. Well, what do I do as a smaller central bank? Well, one of the hedges I would recommend them is buy Bitcoin and mine Bitcoin. Use some of your government's electricity, mine Bitcoin, and take a bet on that, because that's one of, in my perspective, one of the highest return, lowest, high risk, high return, obviously. But in terms of risk rewards, one of the largest ratios of wealth redistribution that I think we're going to see. Yeah. And therefore, when the smaller central banks start to bet on it, you can have a game of chicken where the largest central bank that owns all the assets has the least incentive to announce that they are holding Bitcoin as a reserve. And therefore, you could have a game theoretical scenario where in a real quick period of time, you can flip the switch in between world powers and central bank powers using Bitcoin as a tool and a mechanism by central bank to wage currency wars in order to gain more control in a system where, let's face it, everybody is getting shafted by the dollar, because dollar is exactly where you want to be in terms of fiat currency right now. So the dollar is getting significant strength against other currencies because it owns the unlimited ability to use these systems, use the oil markets, the gold markets that are all priced in dollars, and the fact that it has this Federal Reserve System to actually make dollar a much stronger. So what is China going to do in an environment like this? Well, of course, they're going to devalue their currency. If the world is moving to deglobalization and nobody wants to purchase products from China anymore because of the politics of the situation, they're going to devalue their currency and use that as a tool in order to try and get their goods to be cheaper and cheaper and cheaper, strengthening the dollar, which means that people are going to use the treasury is only going to get stronger, but the goods are going to get cheaper and cheaper in China, and it's going to be a currency war and a trade war that was happening prior to this as a result of this. So these trends is global currency wars, and here's where they're going to be used most, and that's where Bitcoin becomes an interesting tool.
100%. And yeah, we've covered this in great detail. As you say, the trade wars were heating up and China started to lose that peg a little bit before all this happened. There's the rush to US dollars for safety at the moment. You've seen, just these little canaries in the coal mine. Oil take that plunge. The Aussie dollar down 30%, this year. I think that gold and Bitcoin and these things can go in the opposite parabolic fashion because of the amount of money that's out there. And nobody wants to be first, but then nobody wants to be last. And as soon as they hear that one of those little central banks did it, we've already seen a lot of them continue to increase their gold holdings. And there's 100 currencies out there. And what are they? They're just nothing currencies. Nothing's backed by anything anymore. Everyone else is printing, as you say. At least this time around, for the first time in history, people have the ability with their crude smartphone to download an app and get into Bitcoin from their local currency. And that's changed a lot even from the 2017 bull market, the number of on-ramps and currencies for people to get into Bitcoin. But I do want to dive in. So the US dollar milkshake theory, some people call it, as you said before, it's just everyone having to really use dollars. The Bank of England said that that's not fair. We know Russia and China don't like it. They're trying to move away from that system. How does that play out in your mind? Does it get to a point where it just gets too strong and people say enough is enough, or what happens there?
No, the dollar will get stronger and stronger and stronger until you have a complete reform and shift, and that's a political conversation, because the last major reform was after the World Wars. So really, you can take the health crisis today as a warlike environment, and at the end of this, you will have political negotiations, and people, if those political negotiations don't go the way that they want them to go, then they will be looking at, China's already said, well, we're going to use DCRED, the digital currency electronic payment system. And there's you're going to see a lot more from other central banks looking at what they're going to do for their power plays. And the smaller ones are going to be the ones that I think are going to use Bitcoin as a tool. And then the larger ones will follow. But I'm for, if I'm in fiat money right now, I'm in dollars, and that's not about to change from my perspective. People ask me, what am I holding right now? Well, I have enough fiat money in the country where I live so that I can just spend and not have to necessarily worry about selling any of my crypto assets. I've got dollars, I've got stable coins so that I can easily get in into and out of dollars and into crypto in a very easy way. I personally, I should have more gold as a hedge against, the internet and Bitcoin. But personally, I've never just, I've never gone that deep into actually the process of how you store gold, because it's a complex process. But then, to me, the vast majority is Bitcoin and Bitcoin private equity, and those are the things that that I'm believe are going to be, that's my personal perspective on the winners in this scenario. But dollar is still king until it's not. And then you will have a radical reform in a new currency that will be the power. My forecast, it won't be a national currency. It will be a global institution like the World Bank that will use their digital currency. And they're already issuing their loans to India. India has already relinquished control to the World Bank, as they've taken their billions in order to rebuild their health system. But what that does is it cripples a country, because you've got to look at the flow of funds with the World Bank. So I created a video on this. It was called the Indian Financial Crisis. And essentially, what happens when the World Bank creates money, essentially, they're doing quantitative easing. They lend that money, and then they connect it to having to spend money with the country like in the US. So if India right now will have to buy all their healthcare systems from a country like the US, which means that they borrow the money in dollars, subjects them to currency risks, and those currency risks are not going to, are dangerous for when you're issuing a loan and then for another institution. Then they take that money and spend it on rebuilding their healthcare system, but the terms of the loans will be connected to having to spend it on goods in dollars in America. So America ends up with a bunch of debt-free money. India ends up with a bunch of debt, which doesn't benefit their people. And then you end up in a really dangerous scenario where it's one thing borrowing from your own central bank. At least you would have thought that they'd have more interest in the country succeeding, because if the central bank owns everything, they still need a little bit for everyone else. Otherwise, there is no economy. But when you have an organization like the World Bank, like in Europe, like you're seeing right now, countries like Italy and countries like Spain have to beg the European Central Bank, which you think that they're not acting like one country. They see themselves as separate countries. Yeah. So relinquishing your power to another central bank is suicide for your country. And they will use that in order to take, political and corporate beneficiaries in the rebuilding of your country.
And do you think, I think central banks just still don't really understand economics, like a lot of people are saying. Some things I think they realise very much that they're doing, like this power struggle and the way it's all heading. But other parts of me say, to them, they think the $700 billion bailout in 2008, that worked. So this time around, let's do 10 times as much and put into the system. Last time around, it didn't really cause inflation. It really just drove up asset prices. And as you say, the rich and the banks got a lot of that money. Do you think the conversation is now changing, where it's getting to the point where there's going to be a lot more money? Governments are going to spend on infrastructure and it's going to get into the real economy. Maybe we're starting to see these UBIs and, in Australia, everyone's getting their $750 a week from the government now. Is this different and it is going to result in inflation?
I do think this is going to be different. So you've got to remember, when my scenario where you replace central bank digital currency and then bank go bust, that's not inflation money. Taking debt-based money and replacing it with debt-free money. When you factor out the interest, you don't get inflation in that scenario. You're just replacing one form of money with another form of money. What they're doing with quantitative easing, that is inflationary money. But we're in an absolute crisis where asset prices are crashing without the QE. And therefore, you're going to have to enter a period of deflation, which governments and central banks are trying to prevent right now. But I think, I remember seeing an interview with the Fed chairman, and one of the questions they asked him, if you could start this from scratch, if you were still in this scenario right now, what would you do? And he said, I'd retire. So nobody knows the answers to how this is actually going to play out. The reality is that we have entered into uncharted territory. Now, I do believe that we're not going to see a zombie apocalypse world. We're not going to see, the unwinding of all the innovation. I do believe that we're going to enter into a depressive environment, which is a definition of, the definition of a depression is several, contractions in GDP and moving into that environment for several quarters. However, what the government has shown for the first time in human history is they're not willing to let stock markets crash. They're willing to overwrite the market. Yes. So that is China became one of the fastest growing economies in the world through communism and through opening up a capitalist side to it. That is what we're going to see in many, many countries. We're starting to already see that that we're moving to economies where our freedoms and privacy just don't look the same as they used to. And so I don't believe that we're going to see this doomsday scenario where the governments let the markets correct themselves. They won't let the markets correct themselves. So what are they going to use? They're going to use financial engineering, radical monetary reform, because it does work and it's probably the right thing to do. But the real question that you have to ask yourself is, in all of those radical reforms, there's two impacts that it has. One, it removes many of your personal freedoms and it removes many of your privacy benefits. So you have this two-tiered system where you have this Bitcoin blockchain world, which is privacy enhancing and freedom enhancing, competing with this world that they have to use financial engineering. But the only way to do it is to essentially create a form of money that means that you have less freedoms and less privacy. And what that means is that they will essentially use that after this health crisis for tax collection, because they have to get more and more tax in order to run the economy on something that looks more like, more socialist and moving towards more communist. And therefore, it's a removal of the ownership of private assets and those being repackaged into a central bank. So we're changing ideologies and we're having fiat systems that, in order to keep it alive, we're not going to let the system implode. It's just going to impact your version of freedom and your version of privacy.
You say they have to increase taxes to pay for it. Is that because they don't understand the power they have yet or what they could do? Because a lot of people now are saying, well, if you're going to spend this money, why do I pay tax in the first place?
Yeah, so at the moment, tax is a mechanism for paying the interest to bondholders, which used to be your pension, so you would benefit from it in your pension, but now it's the central bank. So the central bank is becoming the largest bondholder, and also the global economy. So, China owns more treasuries than anyone else in the world, and more countries, as the dollar strengthens more and more people around the world will own more and more treasuries. So the government have the ability to issue almost unlimited treasuries, and then tax is used in order to pay off some of that interest. But then that interest, if it's moving towards the central bank, you just have to follow the flow of funds. they can start to realize, well, why are we paying the central bank all this interest? Why don't we just reduce the amount of tax that people need to pay and issue the money direct? Now, a libertarian will say, no, that's inflationary. No, you're replacing one form of money with another, removing the interest and making a more efficient, more transparent system. I do believe that governments have the right to create fiat currencies, but why outsource that to the private banking sector? Why add the bond markets in the middle? Why not just have one form of money called M that it's completely transparent, where if they're increasing the money supply of M, everyone can see that, and they can see inflation and deflation, and they don't need to use monetary policy and interest rates in order to confuse and create these incentives that move money from the tax collection to the private sector. I don't believe in this fully libertarian. Fractional reserve banking was a libertarian solution. Is private money. It is market-driven money based upon loans. Now, of course, there is a bit of crony capitalism in there because you have to get a banking license, and then the central bank controls who gets access to clearing, and that creates a virtual monopoly. So therefore, it's more crony capitalism rather than free market-driven capitalism. But it is still a free market solution to money creation. So I believe that. Yeah,
I was going to say that's the point I want people at home to understand. The argument against this from libertarians, and I think it's Keynesians, saying, well, we can't let governments just spend, because once you let Trump hear that the brr, the money printer, Trump's just going to keep spending on everything, and then it ends up in inflation. So that's where you still need to find a balance, even if they were to create money, don't you?
Yeah, you need a money supply, which is the sum of all the cash and coins that governments have created, the sum of all the debt-based money that banks have created, and then other forms of money. And let's not get into derivatives at this stage. But you've got these forms of money. That could just be one transparent form of money called M. And it would be really easy to find out whether the government is abusing their power, because you would see inflation and deflation very easily in the economy. Now, obviously, statistics can be manipulated, but you can have private companies creating their version of inflation targeting statistics. But if a government messed up their currency, it would be really easy to detect when you do it through this mechanism. Now, you don't need a blockchain in the middle to do that, but if you want to add a blockchain, then they can get innovative and try and add that. I don't think that's a necessary mechanism, but it's easier to see that because inflation, is simply increasing the money supply. Replacing one form of money with another and taking out the interest is not inflationary. And the myth that governments are printing money, they're not. They're borrowing money. Now, I know that may sound like semantics and nuance, but it's a hugely different concept. Printing money is very different to borrowing money, and trying to stimulate the private sector money through bank loans. These are very different things that many people get very confused with, and something that I've really had to fight with many economists over the year, and there are many smart economists that understand the system. Gets back to that original question. Are central banks and governments having these conversations right now? I do not believe that this is some, you've got two choices. This could be one ginormous conspiracy theory, but the reality is that the way that this economic system ends is if these few people own everything, they have no economy and everything gets disrupted. So the end result of that conspiracy theory doesn't favor them in the long term, if we're thinking long term. This is systemic. This is a system that we have gradually innovated and built upon over time. And a bunch of people all serving their own fiduciary duties to their shareholders, meaning that we've ended up in the largest regulated Ponzi scheme in financial history, that we now need to use financial innovation, rethink economics. And it is today the most exciting time to be alive in financial history, because we are going to see more change in our monetary system, more education. And it just happened to coincide with a time when me and you can speak on the internet, everyone's in lockdown, and more people are willing to listen because they don't understand what's happening in their day-to-day world. And they're in a situation where they're literally, do I buy food right now or do I pay my mortgage? They're going to choose food. That means that the financial system as we know it today is over. And if it's over, that really harms the very, very rich, because they still need the economy in order to actually sustain that system.
the people that own everything already, the rent seekers and that. Yeah, and we've had this conversation a lot in some of the groups that we have. And I just think it is so interesting, as you say. And we're still relying on the fact for people to get interested in this to some degree, because we live in this bubble and it's fantastic that we can have these conversations and a lot of people are going to enjoy this. But 99% of people just, they're at home watching The Bachelor and they're still not interested, even though they've lost their job and whatnot. So we've still got to introduce people and try and have these conversations with people. We've spoken a lot about the US dollar, treasury bonds and whatnot. How does this sort of play out for other countries? If globalization is kind of ending a little bit, I'm not sure if Australia's a good example here, if our banks aren't going to be able to borrow as easily and fund themselves for overseas. What about all these Southeast Asian countries that have their own currencies? How does it end for these emerging markets that have all this debt? Like, what is going to happen? Is it going to be yellow vests and unrest and governments saying, what do we do? Just spend, and then they end up in inflation like Argentina, Zimbabwe. What do you think happens to these emerging markets?
Yeah, so the emerging markets need to really sit down, look at what trends are coming and decide how they're going to react to it. And it's such a incredible opportunity for them to completely rethink the way that they've been doing things. So a country like India is saying, well, let's debt finance our way out of this issue and we'll use the traditional mechanisms for doing that. So India is going to be moving into, perpetuate, debt slavery, and that's where the economy is going, and that's going to be very destructive for their people. China's deciding, well, why don't we just, take full control? We've got an economy that saw one of the largest growth stories, and built upon internal communism and global capitalism, that are more used to that. So when we can use what we're used to, what our people are used to, and make sure that we create something that is more insulated for us. But then obviously we've still got the exposure to the US. So all of these countries, all of these have the opportunity to rethink their economies. Now, when you don't have something like the dollar to back you up, then obviously you can get countries that will get it completely wrong and hyperinflate their economies and create more poverty, as we're seeing in countries like Zimbabwe and Argentina right now. But that is based upon leadership that is serving self-interest and corruption, from my perspective. If you can have good leadership that actually genuinely looks to create a superpower, growth story, they're going to be doing several things. One, they're going to be focusing on how they can not be in a situation where they have to rely too much on imports. So, if the supply chain breaks down again, how do we not get in this situation again? And people are going to be looking at really investing in their internal infrastructures. The borders are going to be closed for a long time. So how that ever plays out is 100% political conversation. But then they have a choice of what to do with their money and what to do. Now, they can either take a radical move and think, well, why don't we bet on something that's apolitical, just in case we screw up our own currency, and make sure that we got some reserves. Obviously, they're still going to buy dollar-based products. So that, I think they should be purchasing Bitcoin-based products as well, and they should be allocating time to mining, and they should have that as some of their reserve assets. But also, they should take the money that exists in their economy and really start to think about what type of digital currency they're going to create and how to distribute that in a more fairer way, which means that you're going to have leadership that really genuinely gives a shit about their country, rather than crony, capitalist leadership, which creates hyperinflation because they're serving the interest of a few rather than the many. And so, unfortunately, that is a very political conversation. But if you have the desire and the will to really serve your people and really think outside the box, then you can simply create, products that serve your country without having to think of the conventional. And you have a really great opportunity to rethink your currency, use technology in a way that serves your people, distributes to your people, and create a really great, and be an experiment for capitalism actually working.
Yeah, absolutely. And with all this oil going to waste, it makes you wonder, the gas flaring, we've sort of seen some Bitcoin mines talking about setting up next to this gas flaring setup so it's not going to waste and whatnot as well. So I think it's slowly definitely going to happen. One theory that I've had for a while now is that behind closed doors, central banks are talking to governments and pension funds and basically saying our only way out of this is to pump the stock market 7 or 8% a year to fund retirees. And that's kind of one step removed from just saying universal basic income. Let's just print that money and give it to people. Why do we need to pump through the stock market and then they get their retirement funds? That's kind of what we spoke about before. Again, are we just sort of guessing that these conversations are being had? What do you think about the universal basic income sort of argument?
Yeah, I mean, the fact of the matter is that bank bailouts were just an incredibly inefficient way, using quantitative easing. So you've got different ways of looking at this money. You can either just inject it into the banks. You can use quantitative easing to purchase bonds, which gets it to the government, and it gets it to the large corporations to buy back their stock. Or the government can actually just essentially distribute it to lots of people. So quantitative easing for the people is essentially what we're seeing with some of these funds. And really, we have to recognize it's an appreciation for, do you share an ideology that the government has the right to create money? Or do you think we should move to a more, capitalist form of money, which is what we've been in? Crony capitalism. We've been in the crony capitalism model. You could shift to a more capitalist model of money creation, completely private, or you accept that the government should create money. And then you have the question of what is the best way of distributing that. I believe that markets do need to correct, and you can't, the solution to an over-indebted nation is never put more debt in order to kick the can down the road a little bit further. You have to, at some point, let the market play out. Let the market find its true stock market price. The problem is that's going to affect a lot of our pensioners. Now, it just so happens that, obviously our elderly population is decreasing as a result of this health crisis, which is a really unfortunate, a crazy thing that we're even having that conversation. But that's the reality. This health crisis affects the elderly more. But the pension system is in a lot of trouble. It has more liabilities, and I don't think the answer is make sure that stock markets perform so that they can then, do that. You have to have a pension reform. You have to have a monetary reform. Same of the more is, you can have same of the more, but it has to coincide with new forms of money that exist in a different format, that are created in different formats. So to me, monetary reform is the only solution, rather than just trying to come up with a new mechanism for creating these fake bubbles.
And I think what we're seeing right now is the examples of governments around the world experimenting with different things in terms of their stimulus package. So, in Australia, they're trying to make it really easy for these small businesses to keep people on the payroll, but it's like they're hesitant to give that money directly to people, whereas other countries have just subsidized people's wages directly to them. Other countries, again, they're loaning money to the banks, and then we've seen the Fed create these middlemen to buy junk bonds and junk bond ETFs because they're scared to do it directly. So it's all this sort of this chess game of money that we've been talking about.
It's tricky, and it's really easy to criticize our governments right now. But if you were in that job, that is a effing hard job. Like being in charge right now, 50% of the people are going to think you're an absolute asshole for what you're doing. 50% of the people are going to say, "Why didn't you do it sooner?" There is no winners for these world leaders.
And they don't understand money. That's the thing. They don't understand money in the first place. Yeah.
Exactly. They haven't got the foundational knowledge of money creation. They rely upon economists. Look, the universities, I read an article yesterday so one of the real challenges is distributing these funds, right? You come up with a bunch of money and everyone abuses the system. What did you see? Harvard University, that has a $40 billion endowment fund, that is one of the largest investors from money that they've been overcharging to students because they've created a market whereby people are willing to pay extortionate fees in order to go to the best university that will get you the best job. or the best college, sorry, I'm using English jargon here, the best college to get you the best job. And they apply for an $8.7 million bailout. You know, what the heck? They got a $40 billion endowment fund, and they're taking money from the government. That is money that could have been used for small business. Shame on you, Harvard University, you know, for taking money from the government right now. But, you know, it's easy to say that, but that's what the system does. When you're trying to redistribute money, you get so many people that want to abuse that system, you know, and then you're in this, you know, this scenario where if everyone else is getting it, you want to get your piece. You know, I would say to a lot of those people that are getting the $1,200 sent to them, I'm sure some of them are using it to buy Bitcoin. They don't necessarily, they've been, you know, listening to your podcast, they've got some savings over time. But when they're entitled to it, why not take the $1,200 and put it in Bitcoin? Why not?
I'm not sure
if you would.
If you saw the tweet that Brian Armstrong from Coinbase put out, they had a massive spike in $1,200 purchases at Coinbase in the past few weeks.
I didn't see that. Brilliant.
Yeah. And in Australia, we did a survey, and people are going to buy gold, silver. Perth Mint, you know, they've sold out of gold and silver products. People are buying Bitcoin at record rates. So yeah, I definitely think people are definitely waking up to what is going on to some degree. And one thing that we've spoken about is there's a lot of people that want the system to collapse. They've got their gold and silver, they're stockpiling canned food. Some people have got bullets and that as well, and they are waiting for Mad Max. I don't think that's going to happen either. And it's the haves and the have-nots. You've got to educate yourself, do something about it. Not get wealthy, get rich. That's not the right term, but don't drift on the wrong side of that inequality cap, because the opportunity, crisis brings about opportunity.
Yeah, I mean, one of the reasons why I got so much more active on my YouTube channel recently is just simply because, you know, everybody is a speculator. And most people don't want to speculate because it's complicated and it's not your passion, maybe. You just want to do what you want to do, or what you enjoy doing, or what your job is, or what your career is, or whatever. But unfortunately, everybody has to become a speculator, because even just leaving your money at a bank is a speculation on the credit risk of the bank. And then you need to start thinking about how, if you've got wealth, you know, wealth becomes a really big problem in these times. You've got to start thinking about, you know, the bail-ins didn't affect the person that had $10,000. It affected the person that had $1 million. And so if your $900,000 is on the line because, you know, $100,000 is subject to the insurance, which might be another, you know, Ponzi scheme as well, you have to become a speculator in today's market, unfortunately, because you're going to have to protect your wealth in this scenario. So the only way to play in this, the system is the system. There is systemic risk in the system, and the only way to play in it is to actually, you know, really understand some of these trends. I know they're damn complicated. It's taken me 20 years to understand our system, and I'm learning every day as we create these new things.
Yeah.
You know, but the only solution in all of this is a more educated person taking more responsibility and not outsourcing their personal finance. One of the things I really wanted to do, because I started creating these videos on my YouTube channel, and then I started getting tons of questions that I've never seen before. I'm normally just busy focusing on business and just don't have time to create the content. But during this lockdown, I've been creating a lot of it because I want more people to understand it. But one of the things I want to do, Alex, and it's a personal mission now, is someone asked me these really interesting questions, like, if government can print as much money as they want, then why are we paying taxes? Good question.
Yeah.
Right? Good question. And so what I want to do is imagine if all of my wealth just got wiped out right now, and I was left with $10,000 in the current market. What would I do? And so one of the things I'm going to do is I've created a personal commitment to my community to create a course whereby I take, if I was starting from scratch right now today, I'm going to speak to you about this, Alex, because I think this is something your audience could help with, and I'll make sure that I wanted to collaborate with you on bringing this out.
For sure.
But if I was starting from scratch today, what would I do over the next 8 weeks in order to protect myself and build my wealth in the current environment? Well, there's tax things you do, there's banking things you do, there's things you do with stablecoin, there's things you do with Bitcoin. And what I wanted to do is just literally start from scratch and go through that process so that people could do it with me. Follow along if they choose. It can't be financial advice, obviously, because I'm not doing that. But what I can tell you is what I would do if I was starting from scratch now. So I'm currently researching the best mechanism to put that together, and I'll definitely be in touch with Nuggets News to see if we can do this together in a collaboration.
It's funny you say that. A few weeks ago, I did a video called How to Become Your Own Bank, and I just spoke about the options available to get into stable coins, gold, silver, Bitcoin. So it sounds like definitely a cool extension of that. I mean, we've spoken about so much, Simon. I know people don't like to give price targets, but I'll actually sort of put it out there that I was sort of $100,000 in the next 5 years. I actually think that what's going on at the moment has accelerated that process. Trillions of dollars being printed in a matter of days. Everything that's going on, I really think it's sped up, and Bitcoin's either going to zero and it's not working out, or I think it is going to capture a huge market share of all the money, currency, whatever you want to call it, that's floating around the globe today. So, I mean, you don't have to give a price target, but just talk about where you think Bitcoin's journey is going from here.
Yeah, I've having been around since the first Bitcoin conference and seen my Bitcoin crash from $30 to $3, $1,250 to $250, from $20,000 to $3,000. I fully expect my $100,000 Bitcoin to crash to $20, $30 at some point. And so, I have a simple investment theory, which is I believe that the future of finance looks very different from the past. I want to be in a diversified portfolio of financial technology companies. Many will fail, some will become the biggest unicorns, and that's what's happened over the last 10 years. And also, I believe that the demand for people wanting to own their own money, spend their own money, and have a monetary policy that's independent of a country that cannot be changed is going to be in ever-increasing demands as more people realize problems that they don't own their money, that they can't spend their money, and the long-term effect of some of these economic policies or political policies on their savings. So I think the demand for that only increases. And with every step, with every crisis, unfortunately, we talked about it, you really don't want the traditional financial system to implode in order for you to have a good run in your Bitcoin and gold, because it's just too destructive to too many people. And so the trend is that in order to fix fiat money, we have to create something that infringes upon your personal privacy, and infringes upon your personal freedoms. And that is a currency whereby 3 different governments around the world all think that you owe them tax. They have a digital currency. You're based in one country, negotiating the deal in another country, and they're based in another country. All 3 governments think that they can automate tax collection, so it automatically comes out of that transaction from the central bank digital currency. The different governments will have different policies and say, until you have met X criteria, you're not allowed to leave your house, and you're not allowed to enter a plane until you have downloaded this wallet, and you have digitized your identity and connected it to your central bank digital currency. And once you do that, you can then get on the plane. These are not conspiracy theories. These are what governments need to do in order to enter the world we are today and open up their borders and open up their economies in a way that, that's just a reality. So this central bank digital currency, which is, in my mind, the only solution to the monetary and fiscal and health crisis that we're experiencing right now, will give more and more people reasons to want to have money that they can own, money that they can transfer globally without all of the politics that comes with it. They're going to have to set up good tax structures. They're still going to have to spend their tax. This is not a way of tax evading. This is a mechanism for making sure you plan your finances so you're tax efficient and only pay the right government the right amount of tax. Bitcoin doesn't allow you to do that, but Bitcoin doesn't allow you to avoid tax. It allows you to do it in an efficient way, and then you can choose exactly where you're meant to pay the tax if you structure everything correctly and have a partner that's a banking partner that's crypto friendly, and set things up in the right way. And everybody's going to have to do those things, or they're going to have to live in a currency that eventually might be one global currency that does this on a global level, and all of those things are going to exist, or you're going to choose whether to use Facebook's currency and essentially give the US government a backdoor to all of your financial transactions, all of your data, or you're going to give it to the People's Bank of China, or you're going to give it to Telegram, and you're going to have to choose. And so these currencies are not going to be about anything else apart from you deciding how much freedom you want and how much privacy you want. And Bitcoin has a role and has a place in that. And I think it fits in the middle nicely. You might choose fully private coins. They're going to be in a massive battle with government. Mm-hmm. But something that sits in the middle, whereby there's a blockchain that means you're anonymous, but you can voluntarily connect your identity to a blockchain address, and you can audit that these weren't the proceeds of crime, and you can prove those audits, means that you can sit in the middle between this draconian fiat system versus this government, really, something that governments are really going to attack in terms of privacy coins. But Bitcoin has that balance in the middle, whereby you can be, an honest citizen, figure out if you don't like the laws in one country, then, we're in an environment where obviously deglobalization, but you pick your country's laws, and then you can, create an environment of tax efficiency and only paying the right amount of tax in the right format, and also abiding by all the, the anti-money laundering laws that aren't about to go away that we've seen implemented since 9/11.
Yeah, I think a peaceful process or politically neutral is probably the best way to describe it. So I think that's a great place to finish. I'll put all the links to follow Simon in the description below. As he said, he's been really active lately because there's so much going on. I think we'll have to do more together, Simon. I definitely think there'll be a part 3. But yeah, thanks so much for joining us today.
Okay, thanks a lot.
Cheers, guys.